I feel like private equity, private credit, private real estate, not inherently bad, but to me, like this is the new asset management. This is how Wall Street is going to make up lost profits, because those are active managements. They're super concentrated, actively managed funds with very high fees. Maybe that's the next place that allows people to go into that sexy finance career. And
listen,
if you rewrote this book 10 years from now, that might be the focal point.
I could not agree with you more. And I'm going to tell you, Wall Street, how can I say this politically, delicately?
It's okay. Go for it.
Wall Street will sell you whatever you will buy. Wall Street doesn't sit and say what's in the best interest of investors. Wall Street says, what will investors pay money for? That's it. And there's nothing wrong with that. This is no different than record companies. They're not like, what's the best music? They're like, what's the music that is most likely to become commercially viable so we can sell a lot of concert tickets and albums and streams and merchandise. So Wall Street doesn't sit in a room and say, how do we get people to pay more for actively managed mutual funds? They don't care. They're, okay, fine. People won't pay for that. What will they pay for? What is unique enough that Vanguard can't replicate it for free? And the answer is private equity, alternatives. Like what is something, all right, we can't get 1% anymore for a large cap growth fund. The jig is up. Everyone knows the SPIVA scorecard. Everyone knows there's no persistence of returns. Everyone knows that a manager who is 20th percentile performance is as likely to be bottom 20th percentile 5 years later as they are to be top. Everybody understands this at this point. Morgan Housel and Ben Carlson made sure that everybody would, okay, fine. So they won't pay 1% for that. What will they pay 1% for? That's it. And then once they figure it out, people are really into this alts thing. You got high valuation stocks. You got bonds yielding almost nothing. We could tell a story where those two asset classes should not be the only thing you should own. You should have this third thing that will be non-correlated, LOL, will be less volatile, super LOL. But like we could get people to pay 1% for this. So that's what they're doing. And it's fine. There'll be winners. There'll be losers. 90% of this stuff won't work. 10% will. Very few financial advisors are capable of determining in advance which is going to be the 10%, which is going to be the 90%. So we'll replay the whole thing. And, in 3 years and 5 years, my firm will be unwinding all of these bad investments. And so I love it. It's great. We'll just, we'll write blog posts and we'll do our thing. And then I think you'll be exactly right.